Let me make a couple of, all right, like say a couple of cohorts. That's fine. Okay, I think we're good to go. I hope you guys are doing well. And yeah, the past 2, 3 days, I believe, has been crazy, but as well has been profitable. Right? Hey, people cried. I saw in the chat. I mean, in the group, people are crying. Some are crying, some are whimpering, some are happy. Yeah, that is what it is. Yeah, and I think uh, we we're gonna discuss something. We're gonna discuss something, especially with the leaders. I'm beginning to think, and I'm trying to think that you see, when we come on a Zoom call like this, I believe it is good that we do the sharing of we do the education part, right? We educate, we inform, we caution, and then at the end of it all, we leave it up to you to decide and execute from whatever we have shared. Those that you think may be actually beneficial, right, in your trading. And as I always say, what we do basically in a general Zoom like this is we give you the basic, okay? We give you the basic such that even a starter or somebody probably just exposed into the trading arena for the very first time, or is actually new, right? Has a little bit of idea, but does not know how to go about it. We generally give you a picture, we give you a basic that should get you started and that should get you going. Now, how well you're going to advance in perfecting your knowledge or skill or building up on what you already know or what was shared here is actually very important. Yeah, very, very important. It gives you actually an edge, and it creates a difference, okay, between somebody who probably just sit back and does not do much. So it is very important that besides the classes that we always conduct in the morning, you go and do two things. Go and further build up more on what was already shared or the basic that you have been given, and also practice. Practice. The more you practice, the more it became easier. It's like a song most of the time that we tend to share here. Personally, I do so much encourage practice and going an extra mile to learn more further. Self-discovery is one of those beautiful gift that you earn when you go for it. Yeah, self-discovery makes you learn more, makes you become better. All right, it's very important, and I think that's the reason why most of the times, even when you were learning back then, a teacher will teach, and then left to you, you are now supposed to do the necessary. Go and revise. You could even revise further. Explore some other areas related to the area, I mean, to the part that has been taught, to see what actually the teacher did not touch and see if you can add it up on what the teacher taught, and it will really make you become better. It makes you become an extraordinary student, yeah, always. And that is where you'll see others will be the last in class and others will be the first. Others will be mediocres and just like that. That is just the difference. How serious you take some of this information, yeah? And how serious you dedicate your time and sacrifice, and then you do other things beyond what the teacher has just taught in the general class. That's why some people go ahead to do consultation. Uh, you know, in either secondary school or primary school, a child would go and do consultation, right? A wants to learn more. You get that? Because the teacher does not deliver everything normally in the class. So let's put it upon ourselves to do that always. Now, I must also tell us that as we go through this, we have great leaders. We have people, great traders that we have in the community that have, through the different strategies, have designed their own strategies. They've come out of something that has been working for them, and that actually works for them and has been working for them for some time. Now, when they share with you, it's up to you to see if you will just copy it or you would want to refine it further, and then you own the strategy. In trading, it is about owning a strategy, right? Be shared with what you can get, and then go further and refine it and own the strategy. Because in trading, the most important thing is, can you be able to pick a trade and it delivers and you become successful in it? Are you able to do this consistently? Are you able to have a more winning rate than, a losing rate? Okay? Are you able to do that? Because the more you see, you rate yourself, that every trade you actually pick for yourself, leave along these ones of signals. Every trade you pick by yourself. You look at a coin, analyze, apply whatever we have shared, different leaders have shared on the call, and then try to pick out, do your own analysis and enter that trade. And then try to rate yourself. What is the success? How long does it take to deliver? And how often do you win when you actually make entry? And the best way of doing that, I think probably, now it is a test for those who are in the futures market or those who trade futures, because the success or failure can be very evident at the end of the day. How much you would have made, how much you would have retained, and how much you would have lost. You get that? When I mean losing, it can be losing as a result of liquidation or losing as a result of you forcefully closing your trade because you see it going against you. So because of the fear to lose out, you close that trade. And when you close it, that means you've lost whatever that was in that coin, right? Yeah, so that can be assessed. It can be rated at the end of it. So as a trader, you need to have a track record, right? You need to have something that you build up on. Then you need to create a system that works for you. Okay, there is no this idea that you see you want to. That's why the aspect of mentorship is very key. People don't understand what mentorship is about. You see, a mentor is probably someone whom you would wish to follow his or her footstep, right? You want to borrow something. You want nurturing from the person. You want to follow his or her footstep. And then from there, not necessarily that you're going to be like him. Probably you may be less than him, or you may be better than him, right? Or you may just match him, right? So the aspect of having a mentor is someone you can look up to, someone you can learn from, someone who can inspire you, someone who can, someone with whom if you just talk or you just share ideas, you never work out the same, right? There's something you'll always pick out, right? There's something you'll pick up and build up from. That is the essence of the mentor. So you cannot say you're gonna follow everybody. You can learn from them, but you're not gonna say you're gonna follow everybody. Mm-hmm. There has to be that person, right? And from there, you build. Honestly, you build. I'm not saying this, everyone has the liberty to do whatever they want to do, but what I'm trying to tell you is something that if you think about, is going to create a difference, right? Yeah, it's going to create something if you try to do that. Okay? Because honestly, there are different strategies. And the more you're going to be sorry to use this word, a prostitute of strategies, then the more you will be failing. I say sorry for using the word prostitute. It's not proper, but just to give something that you can relate to, that you see this person with his or her strategy and probably something is working for him. You want that. The other one, you want that. Like you don't have a stand. You don't have a stand, right? You just don't have a stand. You're moving about. There was a song in sometimes back in our country called Atoti. Atoti, you move here, you move like you're stepping here, stepping there. You don't have a stand, no clear path. You're just moving about everywhere. There, you're failing. There, you're failing. Honestly, you are failing. Okay. Yes, you may be learning, but it will take you a while to get a grip of the sense of direction you want to take. Okay. So I hope this sinks in because I believe this overview is really very important and key. So we need to borrow something from them and then put them into practice, okay? Yeah, because if you don't do that, things are not going to make sense. I have always often gotten people who sometimes even come to my inbox. You know, they just want to be, they want things to appear the way I do, like they really want. You know, they just want things to match the way I do my things, you know. And for me, I'm always very open. For me, it's not a matter of you wanting things to be my way. It's you learning, and then from there you can pick something to build up on, right? You can devise a strategy. Let me tell you, there is nothing more that you will ever get other than learning from this and we repeating the same information always, right? And you don't get it. You'll attend Zooms upon Zooms, but you feel you're not yet there. Why? Because you're not taking them serious. You think you want to apply everything. You want to use everything. Pick one, pick two, pick three, and merge them and try to own them. Okay? Try to own them. Just understand what is important. Understand the psychology of trading. The background which I laid, I think, on Tuesday. Something like that on Tuesday. If you have that, you can apply indicators. You can combine it with trend line, and you can be a perfect trader. You just have to refine it, right? Just know, where do you begin from? Where is the first principle? Where is the first principle? Where do you start from? And until the confirmation and making up a decision on, okay, I think I'm good. Let me do this, right? But then at the back of your mind, you put in the psychology of trading. What is the intention of what I'm seeing in the market currently? Is it a good intention or is it a manipulative intention? Yeah, is it a manipulation, right? Is it a manipulation or it's real? It's actually what is happening. Okay. Then you go ahead and, execute your trade. Execute your trade. And once you do that, with whatever I shared the other time, putting in the aspect of wallet management and risk management, ladies and gentlemen, why not? Why not? Why can't you win? You get that? Why won't you win? So it's very important that I had to put this highlight, so that we are on the same page. Okay. I hope you picked something out of that. Yeah. If you picked something out of that, because from what I'm going to share here, it's just going to be roughly around 1 hour, but it's going to be productive. And if you can build up something from, it will be very important. Okay. So I hope that sank in. Uh, yeah. Are we good? Is my audio okay? I don't want, again, a scenario where the audio is not clear. Eh? Eh. Huh. Okay. Okay. So, nice to have some of these leaders. I'm seeing them here. Good to have you guys. The tireless leaders. Yeah. You always. I believe it's the time is different for different people on the call. For me here, it is 7:50 a.m., meaning I'm already in my new day. Some people are still sleeping. Eh? Some people are still fearing to even raise their voice because it is night. Yeah, so that is the beauty. So, yeah. And some people are planning to sleep. Some people are planning to wake up. Crazy. But by seeing all of you here, that means you value the journey you're taking, right? The trading. You value knowledge, you value skill set, and I think we have a great thing to achieve ahead. Yeah. So let me share my screen. Let me share my screen. Hey, hey, mine I've set mine also. Kids are already at school, so some of us sleep less. We sleep less, we sleep less. You think you want to finish the money, yet the money can't be finished. Hmm. You sleep very late. You're making even $1. You even $1. You don't want to miss it. You just want to collect it and collect it. Money is not enough. I think money, it's not enough. However much you make, the more you make, the more you feel like you're not making enough. Yeah. Okay. So, I'm gonna share something. I'm gonna share something, some basics. I hope you pick something from it. Okay, so that hey, let's pick something from it. We're going to. I'm going to first of all look at the market broadly. Let me see what happens. I want to see what the market has to do today. It has been a damn dumping market. Like the Indian says, dumping so much. So we hope recovers. November should be a good. But I'm gonna ask one question. Let me ask one question as I'm opening my screen. What? Maybe just share with me kindly, and I hope you really share your experience. What happens normally? What drives you? What makes you get liquidated? Maybe just share with me a quick one, a short and precise sentence. What gets you liquidated often? If you that is if you're in the futures market, if you trade in the futures only. But if you're in the spots, it's fine. But I'm talking with reference to those who get trapped in liquidation often. What is that? What makes you okay? What makes you get liquidated? What makes you sell your, you close your trades in losses? Maybe I can begin from there. What makes you do that? A quick one. A quick one. What happens? What drives you to either close your trade when it is in loss, or when you get liquidated? Mm. Panic, fear, yeah, greed, lack of risk management. Sometimes I short a pumping coin, hoping, but it goes up. Yeah, that's an experience. Yeah, good capital allows you to stay a while. Little capital pushes you out of the market. Okay. Yeah. That's a good experience. Manipulation. Mm. High leverage, small capital. Are you sure? High leverage, small capital, isolated mode. Okay, we shall see that. High leverage. People are negative about high leverage, but to me, high leverage has no problem. It's just like somebody blaming Saturn for everything they do wrong, as if Saturn is there. They're seeing Saturn. It is Saturn that deceived me. It is Saturn that told me to do this. I was deceived by Saturn. Are you sure? When you have conscience, and you say it is Saturn. Okay. I hope in the day of judgment you stand with this Saturn, and then I don't know whether it is a it or he or she ask you, did you see me? Was I around? Everything, me. So, but high leverage has no issue, honestly, especially if you understand the aspect of wallet management and risk management. And I'm going to show you, by the way, I'm going to show you that it has no problem. Yeah. But just the mindset, it's really mindset. And yeah, fear, greedy, revenge trading. Absolutely. Absolutely. Okay. That's perfect. Now let me share my screen. Let me share my screen. Share my screen and let's see. Okay. Let's do this. Oh, oh, wow. Okay. So yesterday I warned people. I told people that they shouldn't be so excited because the market is going to dump slightly. It's going to go down. If you followed the post I shared very early in the morning, because the market was seeming like it was dangling, it was bullish at then. But then I told you, you know what is going to happen there? You need to pay key attention on what is happening within that area. Here, the price was around here, if you can remember. This was the rise in the market. This was what was happening. We were around the support. Remember, this was a consolidating market. If you recall, from the very day we started, we actually marked this area, and we're trying to monitor through how the price is faring or how long the price is going to range before it expands. And from this, we realized that, it is consolidated for some time. However, on approaching this area, this is an area that where's my annotation? Where are you again? Why are you hiding? Where are you hidden? Can somebody speak? Yes, the other time Mopio was seeing when I was not seeing. I don't know whether somebody's seeing. Is there anyone seeing why it is hidden? Great. Okay. All right. So, the price consolidated, as I was saying, it consolidated for some times. However, from your, I know Mopio talked about candlestick patterns, yeah? Those different groups of candles. And for me, I normally group those candles into about 4 or 5 categories, with the major one that tends to create differences being those that create differences being the buying pressure candles and then selling pressure candles. I wouldn't wish to go so much in this. It's an area of its own, and I think you covered that. But the buying pressure candles are basically candles like the hammer, the hanging man, and then the dragonfly, right? The dragonfly. So these are basically candlesticks that are formed within a support area, or when the price is approaching a support zone, all right? And as it is approaching a support zone, it indicates an area of interest by most schools of traders who possibly are looking at a buying opportunity. So they want to buy. And because it is where most people would have set their preset, once the price approaches it, and then, the buy order is executed at a go, at once, different traders making entry in the market at the same time. And that is going to build pressure in the market in an attempt to move the market in the reverse direction. And normally it happens in the course of a downtrend. And once the price approaches an area around a support zone, or once it is exactly at the support zone, that buildup of the pressure is going to result into the candles attaining certain shapes. Okay, they will have certain shapes that will actually signify a buildup of pressure, which pressure, as seen in the buildup of that trading session represented by the candle, is going to be transferred in the next trading session once that trading session ends. That trading session, which is represented by the buying pressure candle, it should signal that the pressure is building up for the market to go in the upside. So if that session ends, the same pressure that was built is going to be transferred in the next trading session. That's where now you have a confirmation of entry, right? Because you're seeing there's already a signal, and then you have to confirm. And once you confirm, you're good to go, right? So this buying pressure candles normally happens within the support zone or towards the end of a downtrend. This you're aware, I believe. Now, these candles here, if you look at a support zone like this, That is for the buying pressure candle. Okay, maybe let me say talk about the selling pressure candle. Now, the selling pressure candles for them, those candles that forms towards the end of a rising market, or they're formed towards or around that resistance zone. There are candles that signifies a buildup of selling pressure or the intent by traders to take profit, right? Now, because the market would have risen significantly, the market price would have risen significantly, and those who made earlier entries are looking probably at making exits. So that partial and continuous exit is going to result into a trading session having a pressure, a selling pressure, and it is going to be, represented by the candlestick, the shape of the candlestick. You shall realize that the candlestick will appear something like this. Will appear like this. It will be like this is the body. It will have a long upper wick, right? It will have a long upper wick. To some instances, it may have something like this. The lower wick will be very short, but the upper one will be high, longer. Yeah, and that's where you also have the gravestone dodge. All right. So you'll have something like that happening. Yeah. Yeah. So it's very important. You have the shooting star and then the inverted hammer and then the gravestone doji. So it's a candlestick that signifies a selling pressure building up in the market. So this kind of candles normally appear at the end of a rising market. So if the price is on a rise, if you begin seeing some of the selling pressure candles, it should tell you that the market is losing momentum. It is shifting momentum from the buyers to the sellers. And the moment momentum shifts, a moment there is a change in sentiment where traders no longer want to buy, or they just want to hold, or they just think of taking off profit, then that means the market is going to dump. It's going to reverse to the downside, right? But before that happens, there are signals that happens in the market through those candles, right? You see them, and once you see them, please don't hesitate. Don't think, hey, it is still going up. Don't. You'll be entering a trap zone, all right? You'll be entering a trap zone, and if you're in the spot market, if you make entry, as the market comes down, you're going to go into a huge floating loss because the market is going to go against you. If you are thinking of taking long position, you're going to be crushed to the dot. You're going to be liquidated. If you're not going to be liquidated, you'll experience a massive drop in the price. And because of seeing that massive drop in the price, you'll see yourself, the market going against you, and you're going to panic sell. You're going to sell, and that is still a loss, right? So it is very important. Now, when you're going to make any entry, be it you want to short the market, or you want to go long, or you just want to buy, pay attention to the behaviors of traders within the zone that you want to make entry at. First things first, you open your chart, identify where your price is, then locate your different price reaction zones, right? When they talk about the price reaction zone, I mean the support and resistance. You locate them. Draw your trend lines there, okay? Like in this case, we just did this. We did this sometimes back, and we're just watching. We're just following how the price was, faring within the consolidation price levels, yeah? The upper part and the lower part. We were just watching literally how once price approaches the resistance, how it would behave. When it comes to the support, how it would behave. And the last and the final bit that created the difference was when the price approached this area. Now, if you come around this area, this is a support zone where literally every trader will be eyeing at making entry to either go long, or you just want to buy if you're a sports trader, right? You want to make entry here. And possibly, as the price is coming down, some people would just want to preset around this zone, okay, around the support. Now, not knowing that that much as the support zone are the best entry areas in the market, you should not forget the behaviors of traders once the price approaches that level. Sometimes there's a change in sentiment, right? If around that zone, you see, around the support zone, you see a candlestick that signifies contrary to your intention, which is the buy order, which is to buy actually, then be much more careful, because two things will either be happening. Either there is a build-up for a breakout, okay? There's something, a breakout is happening, is about to happen. A breakout meaning the price wants to leave the consolidation, wants to leave that region, and it wants to dip more further, right? Or it will be manipulation beginning to take effect. This manipulation is intended, you know this, that it is intended to take out the stop people. It will be doing stop hunt. It will be hunting out the people who trade with stop losses, I mean futures market, and will also be looking out for those who FOMO. Those who will see that, okay, I think the price is going down. Okay, then they make entry, and before they know it, the price again reverses the other side. Okay, it reverses opposite. And if they're not strong-hearted, they will again panic sell, because they see, I thought the price is going down. Now it is again going up. Oh man, let me close. You close again your trade, and then you again go for long. Before you know it, you enter long, the price again reverses and goes down. And like, oh man, it is going against me again. You sell. Yeah, so you will be in a state of closing trades in losses, because the market is playing with your emotions. It will be playing with your emotions. Okay, so that's why it is very key for you to demarcate, to mark this. Once you mark this area, go for what is try to look at what is happening around that zone. Now around here, if you can look at this, by yesterday when I shared the other screenshot or notification, this was what was happening. This was the candlestick that was forming. You see this candlestick? This one here? Actually, when this green one formed, it was already a sign that the price was supported already. Right? It was indicating that the price was supported. But do you know what happened? In the next candle we see here, you can see this candle was already telling us something else. And even it was more confirmed by this other next one, the next one, this one here, and then this one here. Already was able to communicate to us so much that if we were thinking that the price was going to go up, we need to rethink again, because it is as if pressure is building where? It's building down. That's why you see in this one, if you check on it very well, it was something. This is a shooting star. This one is a shooting star. It's a candlestick that has it's like this. It has a long upper wick and short lower wick. So it means that when the session opened here, after the green one closing, the next session opened, okay, the price fluctuated a little. It went even up, as if it was really moving well. Before we knew it, it came back to the opening price and went below the opening price and closed there. Having fluctuated a little, it closed down. The same information happened here. The same scenario happened here. That it opened right very well. It went up to that high, and had to again come down and closed here. Now, these two scenarios should already tell you that the price is not willing. The buyers are not willing to push the price up. Rather, there's so much of pressure building up from the sellers. People just want to short the market. People just want to sell. So literally meaning that throughout this accumulation zone, the smart money, what the smart money were doing, they were accumulating orders and position in order to do what? To short the market. They were accumulating it so that they can short the market. They want the market to deliver to the downside, not the upside. You get that? Because as you were very much aware, in the futures market, you short, you long. If you short, you still make money. If you're long, you still make money. So you can accumulate position in whatever area. You can preset, you can enter current price, but your intention will be to sell, right? So people will accumulate enough and they sell to the market. And when they sell, they make profit, right? So here the intention was to short the market. And indeed it happened. You saw that this build up here was already a signal, was already a sign to whoever was taking heed, was paying attention, that if you are thinking of going long, rethink, first wait, first hold on. You get that? Possibly hold on, wait for what happens here, okay? Because if you had taken that decision of long, this is what happened eventually. The price had to drop significantly. It dropped to 111, then it came down to 110, then it came down to, all the way. It dropped up to this area. That's around $108,500. So that was the intention. So make sure as you draw the support and resistance, before you make entry, ascertain what is happening around that zone. That is, if you want to go long, first pay attention to the candlestick there, okay? And also, as you do that, put in other things, bring in this other aspect of checking out for what kind of breakout that is. If at all the price finally breaks below your support, ascertain, is it a fake breakout or it is a true breakout? We talked about fake breakouts and true breakouts. We said fake breakout is a scenario where if the price was going down, right? If the market price was going down and it breaks a support level, you will see a red candle will open above the support and it will close below the support. Then the next candle that is going to open, the next trading session, as represented by that candlestick, must open from below and then close back in above the support. That would be called a fake breakout. But a true breakout would mean that if this is our support, right, a red candle must open above and close below. Then the one that is going to open next, which should confirm whether it is a fake or a true breakout, should open from below and still close below. That is one. If it closes below, it's a true breakout. Another scenario, the first one will open from above the support and close below the support. Then the next one that is going to open should open below. It may even dip, it may even attempt to come inside, right? And come above, but it has to go back at the end of it all and close below the support. Now for these ones that come above the support, okay, slightly, and later on closes below the support, it may not confirm. Wait for the third candle. The behavior of the third candle is what is going to determine the validity of that breakout. The third candle must open from below and close below the support. That is when you will say a breakout has been confirmed. All right? You get that? And once a breakout is confirmed, that means now you can decide to go long if you wanted to. Okay? You can, short, not sorry. You can now go short or you can short the market. Okay? Now, amidst you doing that, also at the back of your mind, don't forget the different price reaction zones. That even after the breakout happening, if the price decides to go down, what are those possible price reaction levels where the price will dip to and react to retrace before it can break and go to the next and retrace and break and go to the next. That is, if at all, it is truly a downtrend building up now. You must find out those price reaction zones. Now, in coins like Bitcoin, personally, how I identify, how I use, how I draw, how I identify my price reaction zone, I don't base on, the way the price was reacting. I base on the psychological levels. you know, in Bitcoin, the psychological levels, the most common and used psychological levels are the world numbers, right? If this was 100, 111,000, the next psychological level will be 110. The next one will be 109, okay? The next one will be 108,000. Like that, this would be the psychological levels. Though amidst those, or in between them, we can have some other mini psychological levels. Like if this was 100,000, we can have 100,000, something like this, 500, 110,500 before we go to this. Then before we go to 9109, we can have something like that. So these are the psychological levels. That's why you see on my chart, you know, that these dotted lines, I've just captured those psychological levels. Yeah, I've just drawn them. Just let them just be on the chart there. Okay, and I see how price will be faring on them. Okay. Yeah, but on the other coins, you just do that. Just identify based on price reaction. You know, based on price action, just identify them, mark them. Like in this case, let me pick any coin. Let me see. Can I use hyper? Can I use hyper? About the OG. Okay, there we are. So let's see if it is OG. I hope we're picking something. I hope we're picking something. I hope we're picking something. I told you that the first instance is open your chart, identify your market price. Okay, I mean, open your chart, demarcate the area you would wish to do analysis from, identify where your market price is, locate and draw your support and resistance, or what we would call price reaction zone. The resistances and then the support lines. It's the support you can establish like 2 or 3. Same applies to the resistance. Now, why establish 2 or 3 support? Because it will help you at a later time to measure and see the differences, the percentages between one support and the next support, such that in case the price drops from the previous support to the next support, you know what the drop is, what percentage that is, to help you set it on your robot. Because now when you're doing this, literally just take it that you're doing things intentionally. You're not just creating, you're not just imagining, you're not just thinking. You are doing it intentionally based on what you have seen in the market, based on what you actually analyze, based on how price, you know, the records of price movement. So you're establishing the margin call drops based on that. You're not imagining, okay? So when you do this, establish this margin call drops, it will help you later on to, I mean, you know, this, you draw this support levels, it helps you to measure and set your margin call drops, yeah, accordingly. So when you do that, before you make entry, as I said, if your intention was to make entry at a market price, once the price drops to your support, don't rush. First, look at the behavior of buyers, of traders around that zone. Is it showing signs of the market moving to the upside, or it is not clear? Or is it showing a sign of the market price going below that support? And you can only assess that by looking at the kind of traders that are forming around that zone. Is it a
Coach
buying
Musa,
pressure candle or a selling
Coach Musa,
pressure candle? Yes, please.
Coach Musa, sorry for interrupting. Are you really sharing your screen on the OG? Because you can't see it.
Oh, okay.
Thank you.
Okay. Hey, so I was not sharing. Okay. Share again. Can you not see it?
Yes, now.
Okay. Yeah. Yeah. So, so I was telling us that that for you to do that, you need to need to locate your areas. Like in this case, if I really want to go for OG, I want to see if I can trade OG, whether going long or short. I must first of all mark. I must mark the area. I can just literally base on this. I don't want too many history or past data. This area is enough. Okay. So since it is enough, I'm just gonna capture this, draw this is where my market price is. So I would take it that this is the first price reaction zone with reference to the market price. That will be my first resistance. Then this is gonna be my second with the reference to the first resistance, right? Okay. Fine. So you already have that, right? You already have that. You have your first resistance. This is your first resistance, R1, right? R1. Oh, what is that? R1, R1. Then this will be your R2. This is your R2. The R2 is just to help you know where to exit next in case the price breaks above R1 and you want to make entry. So that means it gives you the next target to set as your exit point, okay? Then when you come down, you want to draw your support. The first support would probably be this point. And since it coincides with this other area, that means it is a key price reaction zone. You can just put a line there, okay? So that you can cater for both this area. You're catering for this, okay? And you're catering for this as well. See? This is a price reaction area, okay? Why I've decided to take that up is because if you can see here, where's my annotation again? Okay. If you can see here, in this movement, the price dropped from here all the way to this point, and it had to reverse, and it got rejected around there before it made the next move. So that means there's a reaction zone here. This reaction zone was actually later on confirmed around here, that the price from this movement, we can see that the price had to break above, came back to retest the zone before it attained before it went to the R1, right? So that means it gives a confirmation that this is another price reaction zone that we can't just ignore, okay? Yeah. So then the next price reaction zone possibly that we can mark would be this, okay? With reference to the R1, support one. Remember, this is our support, okay? This is our support one. Because a support line is any price reaction zone that is below the current market price. So this is R1 because it is below. It is the immediate price reaction zone with reference to our market price. So it becomes the first support. Then we establish our second support. To establish the second support, we are going to be making reference to the first support. So from the first support, when we go down, where is that most recent price reaction zone that we can see or come across? And for me, I would literally say it is this. Now, it may not make sense, but this is it. Can be there, right? Why am I saying that? Because if you look at this as well, in this movement, okay, the price rose before it actually drop a little bit and then going up to break that structure. Okay, this one. See that? See that? See that movement? If you can capture that. Do you see that movement, literally? So if you are able to see that, so remember there's a failure swing here, if you can see. This was a failure swing. It's a sign of a price reversal to the upside. It is a failure swing. I don't really understand when I talk about failure swing, that this was the previous support. When the price came, in an attempt to come back here, it didn't. There was a failure swing, a gap was created. This was the failure swing. Then we had that. So that becomes a mitigation. Okay, let me not go into that area of the smart money, but at least just know that this movement here created this price reaction zone. This one here, the price came down in an attempt to retrace. It was rejected around there. Then it came down. It got supported before it broke where it was rejected previously. So that becomes our support too. I'm making it simpler for you guys so that when you're now going to practice, you can relate, okay? So this becomes my support too. This is my S2. S2, right? This is S2, okay? Then to establish S3, we're going to make reference to S1. So we're going to look out for the most recent swing low with reference to S2. So I'm going to pick my horizontal ray. Now, if I come to S2, I come slightly down, this becomes a price reaction zone. See that? Right? Becomes a price reaction zone, right? I'm using a line, but if I was to capture it as an area, then I will have the entire part here. I will capture this. I will take this as an area, as a support area. This would be my support area. If I was to treat it as a support, as a support zone, that becomes my, I don't know, is it visible? That becomes my support area. 2. Then this becomes my support area. This becomes another support area. I don't know, does it make sense? Does it make sense? That means the other one there would be my, let me come here. That means this one here becomes, if I will capture that area, the entire area becomes another price reaction zone. Do you see that? That is if I am to base on area, not a line. Okay, that's how I would draw my support area so I have my support. This is my support area 2, and this is my support area 3. This is support area 3. Okay. See that? And possibly the last one in that movement, like if I want to capture an area, I'll have another there. This can be my other. Do you see that? You see? But if I was to use the line, then I just pick this, put it here. There we are. Okay. Does it look good? Does it look... do you understand how you establish the support area? You just look out for price reaction zones. Any movement that causes a shift in the direction, even if it is slightly or greatly, it becomes a price reaction zone. And that's how you establish those. You establish them. Now, the essence of establishing them is you want to see if the price drops to those levels, how is the price going to react? Is it going to react by being supported and then it reverses and goes up, or it is going to break below? Because those are the two reactions that is going to happen. It can either react, if the price is supposed to drop, it may drop to them, and then it reverses after having successfully being supported, or it can break below. And once it breaks below, you know that this is the destination. The next destination is support 2. Once it approaches support 2, it can't help. It has to retrace. It has to gather. It has to retrace or pull back to the S1 that it broke, because it would have broken S1 already. So any price reaction level that is broken, later on the price has to come and revisit. It has to come and retest before it continues its movement. Okay? So the same applies here, that after the price breaking below support 1 and coming to support 2, it will have to retrace back and retest support 1, or the area it broke, before it reverses and comes and breaks support 2, and then it gets halted at support 3. And once it approaches support 3, if it is still a continuation of the downward movement, it has to retrace back to support 2, and then goes and breaks support 2 again, 3, and then goes to support 4, possibly. So that is going to be the trend, the direction of movement. If at all, it is supposed to be a downtrend movement, right? So the essence of you drawing this, capturing this support area is just to see how would the price fare once it approaches them in the future. As the price is going down, you have at least some level or degree of belief that those would be the areas that the price is going to encounter either support or it will break through. Okay, that is where the price is going to react. Yeah. So if you draw this very well, now you have your market price there. You now have your current price there. You're at a point of deciding: do I make entry? Do I wait? Do I use a preset? Right? Because obviously, from any point that you're going to make entry at, it is from that point that you're going to measure your profit, your TP, the take profit percentage. If you decide to enter at current price, you're just going to measure from there, and your target or the exit point will be at the immediate resistance line you encounter. That will be your immediate exit point. Probably it is called, maybe let's call it take profit 1. That is the first part you're going to take profit. When people talk about take profit 1, you see, as retail traders, we look at a complete exit. When we make entry, we want to have a complete exit. But there are people who invest heavily or who open up large positions, right? They make large orders and they have large positions. For them, when they're making profit or they want to take profit, they take profit partially up the trend. If they had, for example, like $100,000 worth of a particular coin, if the price hits a particular TP, let's say it gets to a particular resistance level, they take a certain percentage of profit and they retain the rest in the market. Why are they retaining the rest in the market? They're waiting for any other scenario or any other future movement of the price going past that resistance 1. Like if they were to take profit, once the price reaches this area, they will sell, say for example, they will say 20% of their position. If it was $100, they will sell 20% because they're already in profit anyway, right? So they will sell 20% of the $1,000 worth of position. Okay? Then they retain the rest. What remains is if the price breaks above resistance 1 and it gets to resistance 2, all right, they're going to instruct the bot to also sell a portion. They're going to sell a portion, maybe again another 25%. So for them, they make profit up the trend, right? They take partial profits. As long as they're in profit, they take in terms of percentage. But for us, we may want to exit all here. After us hitting our TP, we exit all. Then we say, now let's wait again. Let's wait. When it breaks about, then again we make entry, wholly, like fully. Then we want to exit again, maybe there. If we hit a resistance area 2, we want to exit at that point. Then we wait again. Like that's how retail traders trade, and that is the practice for us we are used to, right? But the wells or the smart money or this institutional investor, for them, they take profit up there. That's why you will never hear the likes of MicroStrategy selling everything. No, they don't. They sell always a portion of whatever they hold, right? Whatever they have. They sell a portion. They sell a portion. Then they will buy later if the price tries to dip again. They will buy again more at a lower price and they will sell a portion. They don't close everything. Yeah. They always want to make sure money is in the market. They have positions in the market. So they close partially. But for us, we want everything. Then we wait again. We want everything. Then we wait again. Yeah. Yeah. So I hope that picture is clear before we go into now on decisions as to whether we make entry or not, or we make entry at a preset or not. Are we all together at that point? I'm about to conclude. Are we good there? Yeah, you can use Fib retracement as your support and resistance if you are lazy. in drawing those support and resistance. You can use Fibonacci. There's no problem. Yeah, you'll have the Fib levels drawn for you automatically. Yeah. By the way, taking profit in portion is very okay, very okay. And person, there were sometimes back I shared some trades that were actually in good floating profits. I've been taking partial profits from them, and when I see it drops, I just make sure I am not in the negative, right? As long as I'm still in the profits, I sell a portion, I sell them at a 50%. Then once the price drops, of course, I will still be floating in profit, though at a minimal percentage, but then I still buy more, right? Then I take back whatever, then I remain in that trade. Once it hits some percentage, I take a portion. So it's possible. It's really possible, even with the bot. Just a matter of closing a portion. The bot gives you those possibility. If you're selling, it has, I think, 25%, 50%, 75%, and 100. So you choose accordingly. So it is possible. It's really possible. Yeah. Okay. Some people are just interested is the call being recorded? Why are you just interested in, as to whether the coin is, the session is being recorded or not? You're lucky, eh? Me, I don't normally record. You're lucky. Doris always does. So, okay, so let's go. Let's continue. Mm, okay. Call back. Call back is good. Oh, anyway, how you apply it is okay. But it also depends, because callbacks, if you callback, yeah, it's it works. It works in some ways, yeah, but it may not work in terms of that partial taking of profits up the trend. If you see yourself floating already in 20%, and you still have expectation based on your analysis, you see that the markets may still go further than 20%. Close, take 10%, retain some 10% in the market. Just continue floating the market like that. The next move could see you again in another 20, take another 10%, like partially, you're good. Then when you see the possibility of the price now going down completely against you, that's when you close the positions. Yeah, it is possible. Okay. Finally, in this part that I wanna that I'm gonna share, finally, when share my screen. Okay. Finally, taking partially is done when you are in floating profit or floating loss. Why would you close trade when in floating loss? What will you be gaining there? It's good for it's good for when you're in floating profit. That's when you can, this partial profits works best. Yeah, it's good when you're in floating profit. Yeah. So now let's come on making up decisions on as to whether this is more of like live trading. Okay. Just to remind, it's more of like live trading. Let me remove some of this other already know, because I already explained on them. Hey. Oh, okay. Ooh. Hey. Okay. Oh, okay. Let's just remove this as well. Okay, so we are at a decision-making process. Now, there is this, you've drawn you've known where your price is. You know where the possible drop may occur through the different supports. You know the possible TP that you're most likely going to take if the market goes in your favor. But what you're not very sure about is, and also on the basis of how the price is moving, to me, it's a failure swing. There's a break of structure, but then to ascertain as to whether the trend has already been fully established or it is clear, and also to give you more certainty with regards to the status of the coin currently in the market, you need to add other supporting tool. Now, the most supporting tools that possibly you may recommend or you may go for would be one indicator called the stochastic. Personally, I love using that so much because, I love using that. And so I will partially introduce in the indicator, the stochastic. Now, why the stochastic? Now, the stochastic is one super indicator that helps in one. It helps inform you about the status of that coin in the market. It helps to show whether that coin has been oversold or has been overbought. It helps you to know whether the coin is within the demand zone or is within the surplus zone. Okay? Where if it is within the supply zone, that means it is dangerous to make entry at whatever price we're looking at, that current price. Possibly we may have to, under no circumstance, we may have to, without any, we will have to just make a decision of using a preset. If we find that the status of the coin is indicating that the coin is within the surplus zone. We'll either wait or remain patient for the price to drop further and leave that zone, or we may decide to use a preset based on any of the support zone of our preference that we would want to make entry at. But if it is within the demand zone, it will be okay to enter at current price or even just preset just at the most immediate support zone. Okay? It will be good to make entry at the current price and just make best use of the margin calls or preset to the most closest support zone if you want to preset. So let's try to add that indicator. So I'm going to add the stochastic. And the other thing that the stochastic helps us in doing is that it also, now here we are. So what is the status of this coin? What is the status of OG coin according to what you've just observed? We have added the stochastic, and it has those two moving averages, or the RSI, the moving averages, those two that moves together, the K and the D line, that tends to, to signify certain things when they happen, when they cross over, and depending on the region they're in. We said that when you check on the stochastic RSI, we have around two areas. We have two zones. We have this zone, which is below, okay? And then we also have that zone, which is above this area. See? The area above the 80%, and then the area below the 20%, okay? In the default form. An area that is above the 80% is what would refer to as the surplus zone. Okay? The surplus zone or the supply zone. Then we have this area down is what we call the demand zone. Now the demand zone was these moving averages, all these two lines are within the demand zone. It indicates that the coin has been oversold. But if the lines are within the supply zone, it means that the coin has been overbought. And when something has been overbought, that means the price really increased. So it actually rose to some degree. And people who made entry earlier are thinking of taking profit, or they're going to begin thinking of taking some profit or to sell. And when they sell, we are going to see a significant drop in the price. So the best you can do in this case, since we have this already within our overbought region, the best we can do is to wait for the price to drop to this support. So meaning we can preset around this support. Or we can even further wait for it to drop to this support. Okay? That is if you want to go long or if you want to buy. Okay? Yes, it is true that not all, it is not a must that whenever we find these lines within this overbought region, it actually just indicates that the price is just going to drop immediately. No, sometimes it stays there for some time because of the other idea we have of accumulation, that before the price will deliver or expand, it has to go through a moment of consolidation, just a moment of accumulation, right? Yeah, within that. Sometimes it may happen like that and then it still continues up. So it is not a must that whenever, you find these lines above the 80% area, it will just signify that the price is coming down. You can even still actually make some profit from that market, okay? Yeah, so that's why I'm saying the best you would do is you would just preset around the first support, right? Or you wait for the price to just come, or just possibly look for another coin that has a clear direction, okay? Where these lines are either midway here or they are within the oversold region. That will give you more peace of mind if you want to go long or if you just want to buy. Okay? Yeah, so that is the first thing you do. Though, if you look at a higher time frame, okay, it is telling us that the price is really within the oversold. So there is a likelihood that the price is still going to go up. So with the confirmation in the higher time frame of a bigger picture that the trend is still going up because of what has just happened here, there is a crossover. There's a crossover that just happened. Where is it? There is a crossover here. This area. So with the crossover that has just happened, the golden crossover, it should give you more confidence that if you were if you're looking up to making entry at the 1 hour time frame, you could just possibly preset around here. Okay? Just preset around here. Just preset on your first support. Okay? You can preset around the first support. Or you could even possibly just make entry at current price, take profit to R1, and then measure from point of entry to first support, and that becomes the first margin call drop for the first call. Okay? That becomes the first margin call drop for the first call. As simple as that. Okay? But for me, if it were me, the best I would do is basing on what I saw in the bigger time frame, I would just come here, make entry at current price, measure that to my TP, and then I measure this distance, sorry, here to this. That percentage becomes the margin call drop for the first call, and then this to this, just in case, this to this becomes the margin call drop for the second call, right? And then that becomes the margin call drop for the fourth call. From that point all the way to this zone becomes the margin call drop for the second call. See that? See that? It will be as simple as that, so that in case, just in case, the price decides to go against you, you have the different areas, the different levels to take advantage of. The bot will be executing those buys and at the same time trying to make sure that you bridge the difference or the range between your market price and the average price being established. Okay, we already know what happens, what the intention of the bridging the margin call drop. Okay, I mean the average price, making it closer to the market price for the sports traders. Okay, so as it buys, it will be continuously trying to bridge that gap. Okay, so but you know where you want the bot to buy. You don't just set the margin call drop blindly. All right, so as simple as that. With that basic, you can build on something there and try to make it work. Okay. I hope it was clear. I hope you've learned something. I hope you've learned something. Mm -hmm. Overbought. Supply zone, overbought. Okay. All right. Thank you. Thank you very much, guys. I think for today, let's end there. I gotta catch up on something else, and let's meet up. Hey, today is Friday. Oh, okay. Oh, it's Friday. Woo. I didn't know. I had. Okay. So we shall catch up, God is willing, some other day. But I hope with that, at least I should get you going, get you started. Go and try to practice. Go and try to practice. Go and try to see how, But with this, what I've just told you, this coin is going to go well, right? With those margin call drops, if you want to try it out, you try it out. Try it out. Try it out the way I just explained it. Make entry at current price, establish your margin call drops accordingly to the different level, support zone, and then you'll be good. And then try to see for yourself later. But then try to use the multiple buying ratio strategy that helps in closing the gap twice by 2 times. Okay, either use the martingale, the double up, or the Fibonacci. It's good. It's really good. It helps you get out of that market faster and quicker. Okay. Yeah. All right. Thank you very much, guys. Thank you. Race. Yeah. Yesterday she was trying to teach me how to call her name. Ray is. All right. So thank you so much for being here on the call. Thank you, Toidi. Thank you, Brother Emmanuel. I don't know whether you're still around. Doris Angel, Weeble, Chadrick, and all the other leaders who happened to be part of the call. I wish you guys the best. And yeah, let's keep helping. Let's keep supporting. Let's see how we move. Yeah. Otherwise, from me to you, have a blessed morning, blessed Friday, and happy weekend ahead. Until next week. Bye-bye.